Now, with proper planning, a retiree can actually keep their tax bill as low as possible during retirement. Here to discuss some ways to develop an efficient tax plan, which is critical these days, is my guest, Jason Charron with Appreciation Financial. And Jason, can you talk about the difference between tax preparation and what we're talking about today, tax planning?
Yeah, to me, this is a great question because it's usually a point that I try to bring up. Really, the short answer is control. When you plan, you are controlling, meaning you're in front of it and you are setting how it's going to work for you. When you're tax prepping, like doing your taxes on April 15th, you're basically just explaining what you did that last year. And that gives the government more control. That gives the government the position of saying, you owe this much, instead of you telling the government, this is what I'm going to pay you.
Now, with all the different retirement plans in mind, how are they taxed?
Well, retirement planning usually involves setting aside or sheltering income that you haven't paid taxes on yet. You're typically doing it through your employment payroll. So that means you're kicking the can down the road and you're going to be paying taxes on that in the future. And that is normally, or most commonly, the type of money, we call it qualified, that is involved in retirement planning. It takes a conversation and a little shift in thought for you to look further down the road and see, well, maybe I should do something personally or individually outside of my employer design plan. And when you're looking at those cases, you're doing so that you don't have to pay taxes on that income in the future. So you're using money that you've paid taxes on now. A lot of times, if you balance the two, then you're in a much more tax-controlled environment of income in the future.
So how does somebody know if a Roth conversion right now is a good idea?
Everything to me is a case-by-case basis. However, if you were somebody who was accumulating your retirement income basically off of what I was explaining before, all of it being kicking the tax can down the road, then before retirement, it may behoove you to have a few conversations and look at what of those taxes can you wash before you get into retirement. What of those taxes can you alleviate from having to pay in the future when you are on a fixed income in retirement?
Jason, finally, are there any other strategies a person should be aware of if they are already in retirement?
Well, it's really harder to do things after the fact, so you would definitely want to try to get everything done before retirement. But that doesn't mean that you can't shift or reshape your retirement while you're in retirement. So some of the things, what a lot of people don't necessarily look at this side of things to solve, taxes is life insurance. So you may leverage a life insurance policy at that point. And I know it's, boy, you're retired, you're at a higher ages and whatnot, but now there's new reasons to see if that is something that could be a resolution for you. But then also, a Roth conversion of an account is something that could happen at any point, really, too. So there are some things you can do after the fact, but it's much more difficult. You would probably want to be ahead of it.
My guest has been Jason Charron, and this is Retirement News Online. You can find us at retirementnewsonline.com.